Hey guys, Corey here. I just invested $10,000 into NEO only a few days ago. And now today, I have invested $5,000 into SOFI. I'm going to explain to you guys why, and we're going to go over some of the technicals and fundamentals of SOFI. And I'm going to explain to you guys why it's a great stock and right now why it's a huge buy, in my opinion. But first, I just want to explain that I'm no financial advisor, and this is not financial advice. I'm just giving you an overview of the technicals, the fundamentals, how to read charts, different strategies and understandings of the market and signals to go off of. However, it's up to you which stocks you want to put your money into and how much of your funds you want to tie up in that position. So let's talk about SOFI. They're a fintech bank, a little bit different than, say, Bank of America or Wells Fargo. You could think of SOFI as the Rivian or the Tesla or the NEO, and Bank of America and Wells Fargo as Ford or General Motors. They're more legacy banks, whereas SOFI is a more modern fintech bank. Some people think that SOFI is at a sell. There's some sell signals on the technicals, but the analyst rating is neutral to buy, and the one-year price target is above where it's at now. But let's take a look at the earnings, the cash flow, the financials, the fundamentals, the technicals, the chart, and find out right now why I bought $5,000 worth of SOFI and if I think it's going to be a great investment for the future. So looking at the chart of SOFI, we're going to look at the technicals and the chart fundamentals and stuff like that first. And you will see that SOFI came up, came down, came up, came down, and just kind of like this swinging pattern. And you'll notice that these are high interest areas, price action, which I go off of. I keep my charts very simple. And you'll see a bunch of different rejections. 1, 2, 3, 4, 5, 6, 7, 8, 9, sort of a little bit on this one, and down here you'll see 1, 2, 3, 4, and 5. A little bit of a rejection there and here it seems like, and some right there and some right here. And if you look to the left, you'll see that it lines up completely. More rejection here, 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 some right there, another one right there. So these are pretty good areas of interest. And you'll see that SOFI is rejected once, twice, and now rejecting again. So we're kind of at a bottom right now at $7. Like somewhere between $6.50 and $7 is where a lot of buying happens. Every time it touches this area, it goes up. 1, 2, 3, 4, 5, now 6, 7. It's coming back down again. I expect it to come back down a little more. I wasn't really sure I wanted to take the chance on that. It's probably going to come down just a bit more, but I'm just going to sell covered calls anyway. So it really doesn't matter. It hasn't broken below this area since June of last year, so almost a year. But let's take a look at the bigger picture of SOFI and let's pull out. So we're going to hit the daily chart. We're going to zoom out a little bit and you'll see that SOFI started way back here as an IPO up in the $25 range. It stayed there for about a year almost, and then it just slowly dwindled down. But when we look at this picture here, you'll see it spent most of its life coming down, all the way down up until about last year. And you see after this big drop, it comes all the way down to $4. It rebounded, came back up, came back down, settled again at $4, then came all the way back up, and now it's settled in the $6 to $7 range. So it has made somewhat of a recovery. You can see only 3 times they didn't beat the earnings estimate. And by looking at the chart, we can see the pattern here. Once it resists this time, it's going to come up here and try again and try to break through. So I feel this summer we're aiming for a $10 price target. But let's see if the technicals are more important or if the analyst rating and the fundamentals and the cash flow beats the technicals, because the technicals show a strong sell. Well, that's no surprise considering all the selling that happened here and all the downtrend in selling here. We draw a line on the technicals, we will see that SOFI is in a downtrend. If we look at this downtrend, and we could even bring it here down, we will see that there's an imminent break looking to happen. Okay, you can see the triangles forming somewhere here. Maybe it could break down then up, but somewhere in this area, SOFI is looking like it could have another bull run left in it. But let's go ahead and look at the rating. 884 price target for next year. 884 is right about here, which is right in line with what I was just saying. See, right here. It's exactly what I'm thinking. Then we'll get a rejection. It'll come down, and then right around the end of the year, it'll come back up something like like this, and then the new year next year will end up retesting the high. Maybe sooner, but that's just a conservative approach. So let's go ahead and look at the financials of SOFI, and let me show you why I bought SOFI. So first, we're going to go ahead and look at their total revenue. We can see that they beat the year over year every single time. Quarter 4 23, all-time high of $871 million. Gross profit $571 million. Operating income $306 million. Pre-tax income $51 million. Net income $47 million. They are profitable. They have debt, but they're not in debt, if that makes any sense. They are profitable. They're making net profits. Their EBITDA is also good. They went from negative to $5 million all the way to $360 million. There is two things you really want to look at. You can fudge your net income, your pre-tax income. You can mess with all of that. But cash flow and EBITDA are very important and critical markers or metrics to understand a company's cash flow. And if you look at SOFI, their EBITDA year over year is incredible growth. Negative 30 million to 5 million to 102 to 144, 179, 252 to 360. This next quarter, they should be pushing 380 to 400 million in their EBITDA. So this shows you the growth that they've had. And if we come up here to net income, it's the same thing. Negative 95, negative 74, negative 40, negative 34, negative 40, negative 266 to 47. The last quarter of 2023, they were fully profitable. So there's a trend and you guys can see it. Now, their operating expenses have actually stayed relatively the same. That's kind of good because their profits going up, expenses staying the same. That's kind of good. They could lower their expenses. That would be even better. And if we look at the top, we can see the quarters. The last quarter, their operating income, pre-tax, and net income are all in the positive. If we look at the history, the previous quarter, SOFI has officially made the jump to where they've made profits, net profits, and cash flow. Let's go ahead and look at the cash flow. You can see cash flow from operating activities is $215 million. Cash from investing, negative $1.88 billion. Cash from financing, $1.98 billion. Free cash flow, $178 million. So they have cash flow and they have profits. So they have cash flow and they have profits. So SOFI is now profitable. So in my honest opinion, the future of SOFI, and more importantly, the near to short-term future of SOFI, hinges on the upcoming earnings report. If they don't beat it or at least meet it, if they miss this earnings and they're less profitable than they were the previous quarter and they're in a decline of any sort, they are going to be in a lot of trouble. If they match the earnings, things will just kind of stay the same, maybe a little bit better. However, if they beat quarter 4 2023 and beat the estimate, SOFI is going to be doing really well. In fact, I wouldn't be shocked to see the stock price go above $8.50, maybe even $9, depending on what happens during earnings. One of the most important metrics when you're evaluating a company is free cash flow, and pretty much all of this cash flow in here. Obviously, the income statement is also very important, but the EBITDA is really important. And then, of course, their pre-tax income and their net income. Everything is pointing to profits. Look at the cash flow. Look at the income statement. Much better than the previous quarters, which is why I invested $5,000 into SOFI. I love to find stocks on companies that have hit rock bottom and they're making a bounce and they're becoming profitable and there's maximum growth potential. So I have 700 shares of SOFI. My average price is $7.10, which is not bad. I believe this stock is going to bounce pretty hard between $6.50 and $7, so I'm in a pretty good spot in my opinion. But let's go ahead and look at SOFI and how you can generate cash from your position in SOFI if you already hold shares. And I told myself when I was in college studying that once I understood the market better and graduated and got really good and became profitable and understood the market and created a system for myself that worked, I would share it with others, which is what I'm trying to do with you guys. Show you my system that works, my technical analysis, simple yet very powerful, and learning to understand cash flow and the fundamentals that are important and not a bunch of lines all over a chart. I really want to help you guys to achieve financial freedom like I have been able to do. And it is a very hard and long journey without help, which is why I really want to help you guys out, because I never had that help and I had to struggle and work really hard for 7 years doing it and go to college and get a degree in order to help myself understand and flourish and learn faster. It was a very long and painful first 4 to 5 years before I started making profits. Real profits, that is. You may or you may not be down on SOFI right now, but if you're holding shares and you want to make some extra money to hedge your position, this way you're not losing as much money or any money at all, you can sell covered calls. So you're going to go ahead and go to sell, call. I'm going to set my expiration for this week, April 19th, but you can set it out a little bit further. You can go 1 to 2 weeks out, although weekly options are slightly more lucrative. But if you're watching this in the future, it's the exact same strategy. Just go out 1 to 2 weeks or even 3 weeks or a month. It doesn't matter. It's completely up to you. So we're going to go here and click on $7.50. We're going to try to fill it at $6, which is the asking price. You may not get that. And we'll click review order and then we'll submit that and you'll get $6 every week per 100 shares per contract. Juicy premium. Now, if we were to go out an extra week, because right now it's a half a week, a little over a half week because we're going into Tuesday, we would get $14. So that's a lot better of a premium, $15 ask price. So you can see instead of getting $6 for 4 days, we can go out the extra week, all of next week, and we can make up for lost time and get $14 juicy premium. Now, I have 700 shares, which I've already sold contracts on. I can sell 7 contracts. So I click on 7 right here. I click on 6. I got $42 if I was to go out to next week, which I didn't, but if I was to go out to next week, if I would have been able to sell 7 of them at $15 and make $104, which is a lot better. And the reason is the volatility for next week due to earnings. The volatility is increasing because the earnings on SOFI is April 29th, which is a Monday. So next Friday, the 26th, is the last closing week before earnings. So the volatility next week is going to increase, and the week after is going to increase even more. There might be more of a dip, but then it's going to start coming up as people are trying to get in. And if SOFI beats the earnings, which I think they will, it may not go below $7 or even $7.50 again. Now is the time to buy, in my opinion, due to the earnings. As long as they beat earnings, we are solid. So this is how you can make money off of the shares you're holding from SOFI. So let's say you have 700 shares like me, 7 contracts times $6 a week, $42 a week times 4 weeks. You can bring in about $168 a month times 12 months of the year. That is $2,000 a year, which means after 2 years, I've made my $5,000 back. Not quite, but almost. And during high implied volatility during earnings, which happens 4 times a year, I'll make slightly more premium. So this will probably take me just about 2 years to make $5,000, which is all the money I spent. So you can see how it's a great strategy to get your money back and at least continually be making money off of your investment. So in my opinion, SOFI is a great stock to get into right now. They have a good support at $6.50 and $7, and they're profitable. And we're coming into their next quarter earnings, which is coming up in just a little over a week and a half. If they match or beat the earnings, that will make year over year 2 quarters in a row where they're profitable, have growth, and have beaten the earnings. This is good signs for a positive future and growth for SOFI. Hope you guys enjoyed this video. Be sure to subscribe, tap the bell, and remember, give me a thumbs up as it helps the channel grow. If you guys have any questions or comments, put them down there below, and I will do my best to answer them, as I love to help you guys and answer all of your questions. And remember, until the next video, let's grow our wealth together. Take care, guys.